Money talks and the rest of it walks. Good evening and welcome. This is Face the Nation. Tonight our topic of discussion is the recent agreement that was signed between the Hambantota Port authorities, that is Sri Lanka Ports Authority, as well as a Chinese representative, a Chinese company here at the ports, which was held at the Ministry of Ports and Shipping under the auspices of Prime Minister Ranil Wickremesinghe. Now, what does it really mean to a country like Sri Lanka? Why is China trying to leave its footprints after giving us a loan? I saw a recent statement that was made by parliamentarian Nama Rajapaksa, who is hailing from the Hambantota district now. He says something very interesting. He says that during his father's time, who was President Mahinda Rajapaksa, infrastructure development took place. No state assets was sold. However, the young Prime Minister has failed to understand that it was because of the borrowings that Sri Lanka made during that time, those 10 years, that we are in a sad state of affairs right now. And probably the young parliamentarian did forget that in the year 2014, it was his government who decided to give a controlling stake of the Hambantota port to the Chinese. Now, a port which had only 44 ships berthing from the year 2015 onwards is a matter of concern. How do we make it a profitable venture? What does this deal mean for Sri Lankans? What does it mean for the Indians? And what does it mean for the Chinese? Now, to discuss all this and more, we have invited three eminent personalities to the studios. Let me introduce them to you very quickly. Joining us this evening is Professor Rohan Samarjeeva, founding chair of Learn Asia. Nice to have you on board, Professor. Also joining us this evening is Dr. Parakram Dissanayake, chairman of the Sri Lanka Ports Authority. Nice to have you on board as well, Dr. Dissanayake, for the first time. Also joining us this evening is Mr. Rohan Maskorala, CEO of the Shippers Academy of Colombo. Nice to have you on board as well, Mr. Maskorala. So let's start off tonight's show with Dr. Parakram Dissanayake, chairman of the Sri Lanka Ports Authority. Now, Sri Lanka signed a deal with the Chinese for just over 1.1 billion. What does it really mean? Your time starts now.
I think it's important that we put the whole thing in context. And if you take the port of Hambantota, the construction cost was about 193 billion rupees. 193, I'll repeat that, 193 billion rupees was the construction cost. And as a result of that, the annual repayment commitment for the Sri Lanka Ports Authority is, or rather was now, is about 9,100 million. 9,100 million is the repayment cost of the Sri Lanka Ports Authority. And Hambantota Port commenced its operations from November 2011 and up to now. The Hambantota Port has lost 46.5 billion, which is 46,700 million. Staggering, isn't it? And if you take the car carriers off, which was forced to go to Hambantota, depriving the port of Colombo of its revenue, and if you look at the number of ships that the port of Hambantota has handled, let's look at the year 2015. For the whole year, the port handled only 19 ships. I repeat, 19 ships. And in the year 2016, the Hambantota port handled for the whole year 14 ships. And from 2017 January up to June, only 10 ships. Now, the question that I would like to pose is that I think we had two options. One was to keep financing the port of Hambantota, which would have resulted in the gradual demise of the Sri Lanka Ports Authority. So hence we obviously had to enter into this agreement with China Merchant Ports Holding, and besides to make it really operational, we also have to make an investment which would go up to about $600 million. If not, we will not be able to attract ships. That's the context of the agreement in which
Dr.
we are in.
Dissanayake, you mean to say that on top of all this, the $1.1 billion that Sri Lanka received, we need to reinvest another $600 million? You
see, to answer your question, ports have to be demand driven. You can't just build a port without looking at the demand. Now what really happened is that without looking at the demand, they did go into phase 1, phase 2 and did the civil work, which cost the government $1.5 billion. Now if we are to attract container vessels, then we need to have cranes which can service large vessels. So to upgrade this port into a viable proposition, we need to invest a minimum amount of $600 million will be invested for a period of how many years? I would reckon over a period of 5 years, but there again it will have to be linked to the demand factor. Initially it can be $200 million, and then it will keep on moving, and then eventually it will go up to about $500–600 million.
Dr. Sanak, I have a question for you. Now, we got an amount of $1.1 million as FDI to the country. Correct me if I'm wrong on this?
Well, it's a question of an investment into the assets, prevailing assets.
Absolutely. So you have $1.1 billion.
The total transaction value was 1.4 billion.
1.4 billion.
Of which, depending on their share, they would be bringing in 1.12 billion.
Absolutely, 1.12 billion US. And from this, if you were to reinvest another $600 million in a period of 5 years, so you have approximately around $500 million in your hand. Is that commercially viable?
Well, as I said, it will be subject to the demand factor. Ports cannot be supply driven. The port itself, the civil work and the construction was supply driven. And so obviously the new shareholders will look at the demand, and looking at the demand, they will have to make their investments accordingly.
Thank you very much, Dr. Parakram Dissanayake, Chairman of the Sri Lanka Ports Authority, an entity that was making losses after losses for a period of 5 years and only had 44 ships arriving at the Hambantota port. The government took a stern decision to go ahead and sign a public-private partnership agreement with a Chinese company. So let me move my attention now to Mr. Rohan Maskorala, CEO of the Shippers Academy of Colombo. Mr. Maskorala, you have been quite a supporter of this initiative. You've always said on this very show that the way to move forward is to enter a PPP. Now we've entered. Do you think this is something that is profitable for Sri Lanka?
Before talking of profits, I must talk of the losses we had, and I think he touched on that. So we as a government, I think as the public of this country, were between a rock and a hard place. That I would look at Hambantota. We, as he said, we went and did started doing the second stage, where the first stage even we could not get enough business. So there was a problem from the previous regime. This port opened in November 2010. So there were RFPs, request for proposals, called. Various methods were looked at getting investment, but it didn't come. That's the fact, until 2014, when they also decided that the only way out is to work out a deal with China to look at their own constructed port, and nobody outside like PSA or DP World or APM Terminals, who are global investors, didn't come and ask then government or the current government to come, and they are keen to come here. Same situation after the change of government also. There was advertisement calling for request for proposals, but nothing really concrete came, except a few here and there ideas, but nothing concrete. So end of the day, people of this country had to pay this loan back, and it was a burden on the system, and of course the country was having a foreign exchange problem. So in this situation, debt to equity swap is some kind of a solution for the government. So whenever I came here, I said, yes, this has to be finished and done with some way, best possible deal. Some may say this may not be the best possible deal. That is for argument purposes. Now, when I looked over the last few days, government says there's 50.7 in one company, but then there's argument saying that that's an indirect 50.7, but that company is also actually having actual control when the board sits. That Chinese might have a upper hand on those boards as well. But I really don't, it doesn't matter. Let China come and build this port. They have the capacity, they have the money, they have the ships, they have the reserves. I am looking at the multiplier effect of a port working. You can't have any multiplier effect if a port is not working.
Now, Mr. Mascara, my question to you is very simple. Now, you have only 44 ships coming to the Hambantota port. And why would China invest money to this port?
I have a very simple answer for this. China, we all know about the OBOR, One Belt, One Road. Now they are dumping a lot of air extra reserves into global locations where they feel within the next 20-30 years their energy requirements, their raw material requirements, all this supply chain security for a massive economy like China needs global positioning. So Sri Lanka is for them, China can afford to make losses for 20 years if they want. They have the reserves. Sri Lanka can't afford to do that. That's the difference between Sri Lanka and China. China went and invested in Greece, the Piraeus port. Now that port is doing well after they took over.
So Mr. Bhaskar, what you're trying to say is China won't be able to make profits overnight from the Hambantota port. It will take time. So the 99-year lease is justifiable in your eyes?
Well, 99 is arguable. I always talk about these port circles to be 35 years because if you look at Singapore's logistics sector leasing, it's 30 years, then what they call is a top-up, another 30 years. At the
so why a
revaluation.
99-year lease?
I don't know the details why, but then there are two sides for the negotiation. So, but we can't get everything what we want.
Mr. Bhaskar, in your statement you made a very interesting remark. You said that they first discussed about giving away a controlling stake of the Hambantota port in the year 2014. And you have been on this very show telling us that this government has a problem with communication.
Yes.
They cannot communicate it right to the public.
Correct.
They've not been able to tell the public that this was not something that we decided overnight. It happened even during President Mahinda Rajapaksa's time in the year 2014, and no one even staged a strike action. No one even went to the road and said, don't do it. What is wrong with this government? Why can't they get something done properly?
Well, that's a question you must ask the government, but as a citizen I have been always telling in your show that what is being done right is not properly marketed. So that's the problem they have, and they have to sort that one out. I can't help them on that one.
Before I move on to Professor Rohan Samarjeva, founding chair of Learn Asia, very quickly to you, Mr. Maskorala. Do you think democracy always works in a country like Sri Lanka, or you need to be a bit autocratic as well sometimes?
You need to be somewhat autocratic, especially when your per capita is below 4,000 or 5,000. The average level of education and understanding is not really for a mature democracy. So when you take some democratic decisions, people tend to not to understand it. So you need to drive it in a bit of a strong manner, and that is important in a country like ours, in my opinion.
Some thought to the government indeed. Sometimes democracy alone won't do. I now move my attention to Professor Rohan Samarjeva, founding chair of Learn Asia. Professor, you've been understanding and reading a lot on Chinese involvement across the globe. Let's take a look at Myanmar, for example. An investment of close to 10 billion US dollars. Let's take a look at Tanzania. Again, money amounting to billions of dollars. And Sri Lanka, 1.1 billion US dollars only. Did we get the worst end of the stick? The time starts now.
Well, you've got to put this in context. Before the 19th century, the center of gravity of the world economy was here in Asia. China was the largest economy. After the Opium Wars, various things happened and China went into decline. It became a poor country. It had 775 million people living in extreme poverty at the end of 1970s, right? So now it is coming back to where it was. Asia is where all the economic growth is. And I think it's very important for all of us in Asia that China is taking leadership in rebuilding the connectivity. We all know that connectivity is essential to economic growth. And connectivity means risky investments, long-term investments, investments that sometimes will take 8, 9, 10, maybe even longer to yield returns. So China, because of their reserves, they are taking the lead in building this infrastructure throughout Asia. Once the infrastructure is built, They are not going to say only Chinese goods can go through the infrastructure that has been built. We'll also be able to use it. We'll also benefit from it. So I think it's in that context that we have to see it.
But
now
when you look at
yes,
Professor. When you really look at the Hambantota port per se, you can ship directly to Pakistan and then Turkey. These are the areas that they're focusing on. And I'm trying to figure out, every single time that China lends money to a country, whenever there is a problem with regard to repayments, China seems to leave its footprint. They probably take over for a very paltry sum. Why is this? Well,
Myanmar is in a quite a weak position in relation to China, right? There are areas, particularly on the Chinese border, where the government actually doesn't control those areas. So even with that context, you then look at the numbers, which is 7.3 billion for the port and 3.5 or 3.3 for the industrial zone, and you say, oh, that's a high numbers, or are they low? I can't quite understand what your high and low measurements are. Ours is a small economy. We are not seen as absolutely critical to bypassing the Malacca trap. I mean, for everything that China does in this region, people have to understand what we in strategic studies talk about as the Malacca trap. This Malacca Strait is a very narrow waterway, so narrow that in fact some of the tankers that bring the fuel into China, they have to actually divert around Java and come through the Lombok-Makassar Strait. So this is quite a point of vulnerability for any economy, to have all their energy supplies and even their trading go through these narrow waterways that can be blocked accidentally or intentionally, that they can be blocked. So one of the entire strategies of this thing is to find alternative routes. That is why I have been talking about Chaukpyu. Now Chaukpyu is an existing port. It has been built by the Chinese. The oil and gas pipelines from Chaukpyu into Yunnan have already been constructed, right? It's in that context that particular investment is worth 7 billion, right? In our case, quite a lot more has to be done, right? And in our case, it's simply a way station. These tankers don't have to stop to refuel every few miles, right? So that's the context for the Myanmar development. Now, that's a real development. There are many people in Sri Lanka who are talking about the Kra Canal. I don't know what kind of substances they are smoking, but Kra Canal has been talked about for the last 400 years, right? From ancient Thai kings, and nothing has happened. We are talking about lifting ships higher than they lift in Panama. So that is some kind of hallucination that people are engaging in. I'm talking about the real thing, and the real thing is being under negotiation for a Chinese company called CITIC, CITIC.
Professor Samarjiva, before I open the floor for questions from our journalists, Dr. Dissanayake, who is the chairman of the Sri Lanka Ports Authority, said that Sri Lanka needs to invest at least $600 million as part of this particular deal in question. So when you really look at the numbers, you're looking at $600 million being invested by Sri Lanka in the next 5 to 6 years, and then you have the deal which stands at $1.12 billion. Where do we stand?
I'm sorry, I didn't hear him saying that. He said we need an investment of 600 million.
And that has to come from the government.
But he didn't say Sri Lanka. The companies that are in charge of the port will have to invest.
So who is that?
That's primarily the Chinese.
So Dr. Dissanayake, to get some clarity on this. So you mean to say the Chinese will have to reinvest $600 million? Well, or are you saying that the government needs to invest? Because based on what you said, I understood that the government has to invest $600 million.
No, I think you got me wrong there. I think we are loosely using the word Chinese. The joint venture that we have pursued is with China Merchant Ports Holding, which is a public listed company on the Hong Kong Stock Exchange. Now, these companies have got shareholders, and they will not invest unless there's a fair return. That's the bottom line. So I think it's unfair when you dish out the word Chinese. It is true, it's a Chinese company, but it's a public listed company. And having said that, if you take, if you look at CICT, CICT, which is in Colombo. Now, when CICT came as the sole bidder into Colombo, now no one was speaking about Chinese. They were talking about China Merchant Holdings coming in as a sole bidder and making an investment, and that investment in the port of Colombo was close upon $550 million. So if they are to replicate a container terminal of the magnitude of CICT in Colombo in Hambantota, this company, where the port of Colombo, or rather SLPA is also a shareholder with a 15% stake, will have to make an investment. Now this investment will have to come, and the shareholding of Sri Lanka Ports Authority is like SAGT, like CICT, it's only 15%.
So what's the investment like, Dr. Dissanayake?
The investment of
like you said,
no,
that
I mean over a period
of 5 years, how much must we spend?
Well, as I said, it will be a gradual phase, but that investment will have to come if they are to replicate an international world-class terminal in Hambantota.
So they would intend to do that, right?
Of course they will do that.
So then we need to make some investments.
Our investment would be 15%. Our means the Sri Lanka Ports Authority's investment would be 15%, and the 85% will come from China Merchant Ports Holdings. That's how it works.
Professor Rohan Samarjiva, just the port alone won't do. We need to have an industrial zone as well. You said that in Myanmar, $3.3 billion to the industrial zone that was set up. In Sri Lanka, there seems to be no talk of this industrial zone now, despite the fact that political opponents once in a way says about this 15,000 acres of land that is also on the giveaway list.
It's not a giveaway list. I mean, one of the great advantages of Hambantota and Monragal districts, which are the two areas from which the land will be taken, is that they have a lot of land. These are places with low population density and a lot of government land. So I do believe that it will be good for those areas. I heard the president at one point saying, you know, if you want land, come to Polonnaru, I'll give you land. Because that's the way you grow an economy. That's how you modernize it. For the longest time, Hambantota was the poorest district in all of Sri Lanka. Now, of course, you know, after the war, things have changed a little bit. But you need to have industrial development, and you need to use land for that. So that is the real advantage. I mean, if you take Colombo, Colombo is completely constrained by the city, right? Hambantota is not like that. Right around the port, I think there is going to be land associated with the port, but we are talking about industrial zones more in the interior.
Thank you very much, Professor Rohan Samarjiva, for your thoughts. In the first round, I open the floor for questions from our journalists. On to my immediate right is Chaturanga Haporachi. On to my immediate left is attorney at law Sonali Vanigabad again. On to my far left is Charita Fernando. Let's start off with Charita.
Thank you, Sham. My first question is to Dr. Dissanayake. In the media, we saw certain concerns about the actual value of the Hambantota port. There were certain concerns raised that there was no proper, valuation. Can you shed some light into this?
See, there are numerous ways of coming up with a valuation. One is based on the actual cost that you have incurred, and the second one can also be based on the valuation at a given point of time, market valuation at a given point of time, where you get some independent party to do a valuation. And the third is that you look at the future profits and then you come up with a valuation. The valuation method that has been used in this instance, I must say, was the first one, where they have looked at the costs that this project has incurred, and then they came up with a number of $1.4 billion, out of which our investment was a certain percentage, and their investment total figure came up to $1.12 billion.
Now, on the one hand, the joint venture with Hambantota will definitely boost our forex in Sri Lanka. But Standard & Poor has just given a negative rating for China Port Company for taking on a loss-making harbour. How is it that, how will this impact the Chinese counterpart?
Well,
Is
I
it
will not be
peanuts
able
for
to,
them,
yeah,
or?
I mean, I will not be able to answer that question. Ideally, that question should be posed at China Merchant Ports Holding, but knowing their style and the way that they operate, this is a risk that you take. No risk, no gain. And obviously they see the importance of this location, but as you will appreciate, location alone does not produce volumes. Like if you take the port of Singapore, about 2 decades ago, they lost 3 million TEUs almost to port of Tanjung Pelepas. So you have to have the competitive advantage as well. Just by creating a port in Hambantota, if we were able to have the best location, we would have had so many ships coming in there. But the port does not have the right competitive advantage. And what is really important to understand is that without manufacturing, you will not have ships coming in. You have to have production, manufacturing has to pour in there. And when you have an organization of the stature of China Merchant Ports Holdings coming in, that creates the investor confidence that is required. And the moment that happens, the next thing is that you will have investment pouring into the port of Hambantota. When that happens, the second stage is that you will have investment going outside the port area that was referred to by Professor Rohan just now. So all in all, you have to look at and understand that without manufacturing, without factories, you will not have ships coming in the port will not have ships to service.
Okay.
Dr. Dissanayake, I want to ask a question from you regarding the legality of the contract that has been signed. Now, back in 2002, when land belonging to the Sri Lanka Ports Authority was to be vested in a company called LMS, Lanka Marine Services Limited, there was a Supreme Court ruling saying that that cannot be done and that the land was vested back with the Sri Lanka Ports Authority. The deal was made null and void, if I'm not mistaken. So this situation and that situation, how does this differ? How does this land, the Port Authority, which is under the Sri Lanka Ports Authority, being given out, and back in 2002, how do these two matters differ?
You see, I think two areas. One was the sale, the alienation of land, but in this instant, the President and the Minister told the Sri Lanka Ports Authority absolutely there is no way of selling the land. It was about a lease. And again, what you have to understand is that what this contract has done is that we have established two Sri Lankan companies. And that into that two Sri Lankan companies you have China Merchant Ports and also SLPA investing into those two companies. And these are governed by the Sri Lankan laws. So there's a vast difference between the example that you brought in as against what has taken place now, and the land is only leased to these two Sri Lankan companies.
Right. And when we talk about the investing, the Sri Lanka Ports SLPA investment into this, so the Sri Lankan government or the Ports Authority in this case is also taking the risk themselves as well to a certain degree. They are also part of the risk that is involved.
Yeah, the risk as well as we also have a certain amount of control as well. There is no alienation of the control as well. If you take one organization, direct and indirect shareholding is about 50.2, and then of course the chairman of that company also will be from the Sri Lanka Ports Authority. And so when you have the chairman from the Sri Lanka Ports Authority in one of those companies, what does it mean? That we are in control, are we not?
Professor Samarjeeva, a question from you. Now, Shamil spoke about the 15,000 acre plot of land that should be, there's going to be an industrial zone. But when you take a look at situation like leasing out this port in Hambantota, you cannot just lease it out and say, yeah, everything is fine and done. But you have to, the government has to worry about the road structure, water, building infrastructure, all of this. So when you take a look at the other deals that we spoke about, China has reached with these other countries, Myanmar, how are we standing in terms of the infrastructure around the port?
So you see, we are sort of stuck in the past. In the past, we are talking about 1970s, the whole idea was that in the free zones or free trade zones, the first one being Katnayaka and then Viagama, had to be administered by that particular country's government. Now we have seen that has certain negative aspects to that. The current situation is that we have companies that specialize in managing these zones. Right. There are Singapore companies that I personally have talked to with regard to getting them to manage a IT zone in Sri Lanka. And there are Chinese companies that are currently operating zones in Thailand. So these are specialized companies, and it's in their interest to make the zone work. So obviously when you bring them in, it will be in the nature of a public-private partnership, because under Sri Lankan law, under the current law, we cannot give land to completely 100% foreign-owned companies. Now there is this whole question of Shangri-La, where there's not even a single Sri Lankan director on the board, and the former president had signed a deed to give the land inalienably to that company. Now I would ask whether that's a legal, whether that broke the laws, not this,
right? Yeah.
Right? That's the one that one should ask about, whether there was any kind of violation of Sri Lankan law. So what you do is enter into a partnership with these people, and there you'd come up with the terms and conditions, who would be responsible for the roads. By the way, there are many roads. I have driven up to Mattala. There are many roads. 4-lane highways are available. So there's no need to build new roads, right? On which rice is being dried on the side of the road, right? Water. All these things would be part of that negotiation with the company that is managing the zone. Now, I think it would be advisable to get a professional, internationally recognized company to manage the zone, because that way they will bring in the businesses rather than us having to drum up the business. It's in their interest. They won't make money if the zone is empty, right? So that is the whole value of this new approach, where they also are they have the incentives to invest in the zone and to make it successful.
So once again, what you're saying is PPP is the way to look at that as well.
Better than having some Sri Lankan bureaucracy just trying to, managing empty buildings.
Oh, Ron, when you really look at the cost of the port itself, it stands at a staggering $1.32 million US, which is approximately around 1.3 billion US dollars. One of the claims made by former President Mahinda Rajapaksa is the fact that the port made operating profits in the year 2014 and 2015. If so, why give it away? You can always turn it around.
These number games, number statistics can be talked in various ways. I don't know where he drew up this balance sheet and told that there was a profit. Maybe Dr. Dissanayake can look at that balance sheet and tell us better than him, because I really don't think that there was a profit in the Hambantota port at all. That is unbelievable statement for me. If I have not seen it, but I've heard about it. So as you know, he just gave the numbers. We are paying such a big amount as loan repayment from the
Chinese involvement in Sri Lanka. Now obviously China is not Father Christmas who comes and says, okay, we want to help Sri Lanka out, you all are in debt, here you go, this is a hefty bag of money, we just want this port for 99 years and then it's all yours, we'll develop it, and then come 80 years we can always discuss about whether we're extending it or not. However, it's just 99-year lease and that's about it. But there's something more to it, isn't it?
Well,
strategic capability, we saw India taking over the Trincomalee harbour, at least certain aspects of it, and then we give the south away to the Chinese.
Definitely, I think I told at the beginning that China is looking at its supply chain security for the next 20, 30, 40 years. This whole project and its investment in different places, China-Pakistan economic corridor. Now, Professor was talking about the Myanmar corridor. There's another new corridor they have opened through Nepal. So China is looking at this supply chain security as well as trade route access to various markets. As you know, Europe already there's a train running from China to Europe. There's goods moving, high value cargo is moving. So obviously China needs its long-term vision to expand economic activity, as its growth rates have fallen from a amazing double-digit growth to a soft landing of 7 to 8% growth. So it has to keep on the momentum of economic activity, and it has come up with a smart mechanism of getting trade routes across land as well as oceans. And Sri Lanka happens to be in the best place in the Indian Ocean, and if somebody has cash, if United States had cash or somebody else had extra cash, probably they would have looked at it. But this is a country that is cash rich in terms of looking at infrastructure.
India seems to be very concerned, Mr. Maskoral, about China taking away the Hambantota port. And we've seen
what
on numerous
did India
occasions
do?
the Chinese submarines also
I
coming
understand.
to
I understand
Sri Lankan
India's
waters.
security concern, but I always played down this issue because this is much more than security. It's about trade and presence of China's interest on trade. But what did India do? India actually never ignored Sri Lanka for a long time. India didn't look at Sri Lanka as opportunity. Now they see it. I meet a lot of my Indian colleagues. They see that they have made mistakes on Sri Lanka. So that is the mistake of India. India is building a port in Iran. India is investing a port in Iran. Chapa, right? India should have put money here much ahead of us.
So are you trying to say that it is a matter of sour grapes for India?
It is in one sense. It is in one sense. I think if India would look at 10 years back and look at, say, should we invest on our own cargo that is going through Colombo, through terminals, Indian companies would have made money. So India actually didn't look at it that way, and it was a backward decision of India as far as I am concerned, and I told this very openly to my Indian colleagues.
Yes.
Yeah, Professor, my question is to you. Now, in South Asia, large infrastructure projects like Hambantota, we don't see the project taking into account or accommodating demographics or anxieties of people. Why is that?
Well, I mean, anxiety is sort of endemic. I mean, I've talked to people who are actually enjoying the fruits of the Southern Highway in terms of land values going up, and they say, but our paddy fields are going underwater, right? I mean, change is tough for people, right? There are pluses, there are minuses. I think when the port, now it all depends when you talk about. So the port was built before 2010. I can't recall anybody expressing any anxiety or going on protests or blocking roads. I was actually on a TV program with a government minister and so on just before the election, and I can remember people saying how they were asking questions about how they could make money from the port. They were talking, actually the question was, can we sell lunch packets to the port, right? So there was no anxiety at that time. Now there seems to be anxiety. Has it been a manufactured anxiety? That this can be turned on and turned off? That so those days there was no anxiety and now there is?
So given the current political climate and the fact that the former president was from the Hambantota constituency, do you think the government should listen?
But what's there to listen? The port exists. You can't sort of unbuild the port at this point. The port exists, right? It was built on loans. The essential difference between loan and investment, people have to understand. That I think we have to continue to talk about. If it's a loan and there's no revenue, no profits, we still have to keep making payments to the China Exim Bank. If it's an investment, the risk is shared. So ideally what we should have done was to go for a shared investment model from the beginning, not a loan model, right? Mm-hmm. So everybody is talking about why did we get into loans? We shouldn't have got into loans from the very beginning. We should have gone in for a public-private partnership from the beginning.
We've already paid 47 billion Sri Lankan rupees for the Hambantota port as well, Professor Samarjiva. So this raises an alarming trend again. Why did Sri Lanka start borrowing money to build infrastructure in the country? Is that what you're trying to say?
I think we shouldn't borrow money to build infrastructure. When China was building infrastructure, they've got an enormous number of highways, expressways in China now. Who built these? People like Li Ka-shing, who's one of the world's richest people from Hong Kong. They enter into a public-private partnership with Li Ka-shing. They take over the land. Li Ka-shing builds the highway, and he takes a revenue from the tolls. I have always told the people who object to these things from various socialist parties, come with me, I'll take you to China and you can pay tolls. Every road there are tolls, right? So that is the model that the Chinese have used. What you should use is share the risks rather than this one-sided approach where you take loans, and these were not concessional loans. The grace period on this loan, if I am right, Dr. Dissanayake, is over.
Yeah. Yeah.
The grace period on a World Bank or ADB loan is 30 years, because they know that it takes time for the revenues to come in and the country's ability to repay back. This was a 5-year grace period, right? And the interest rates, the actual interest rates, are way higher than if you took it from the ADB or the World Bank, right? So why did we do that? I mean, this is not like saying the Chinese came and held a gun to Mr. Rajapaksa's head and said, take a loan. We chose to take a loan. We could have said, no, we'd rather have a public-private partnership.
And we're in this situation because of what transpired and what happened before in the past.
Now we have a metaphorical gun to our head, which is that they're not a real gun, but as he said, we have to keep paying. That's a real threat. Back in 2007, when the construction began, there was no such real threat. Now we have a problem.
Ms. Sanaka, I want to drag your attention to the initial stages, the rounds of discussions that took place on the concession agreement. There was somewhat a tug of war between the government itself, within the government itself, on the concessional agreement. Now, where does it stand at the moment? So we know for a fact that the military personnel who will be deployed at the port are going to be of Sri Lankan nationals, and the government will have full control, just like the Colombo Port. However, now there is talk that China is not really happy with this agreement. You said that this is obviously not involving the Chinese government. However, the Chinese embassy in Colombo has already raised concerns about this concessional agreement. We saw this in the Sunday newspapers as well, Dr. Sanaka.
No, I'm not sure whether they have raised any concern. I mean, the agreement, the meaning of an agreement is that both parties have agreed. And of course, the government was tough when it came to negotiations because they had to ensure that security concerns were addressed, and we continue to control the security aspects. And as a result, not only that, I think there was also issues about in the earlier negotiations that the SLPA Act and a few acts had to be amended, and the minister in charge told that there was absolutely no way that you could amend the acts, and hence we were able to come up with a structure where...
Which minister is this? Is this the former minister of ports or is it the present minister of ports?
The present minister who took over the negotiations on behalf of the government of Sri Lanka and the Sri Lanka Ports Authority. We were able to negotiate, and as you would see, in less than 3 months we were able to conclude this concession agreement. And just before I really answer that question once again, that I would like to raise this issue of why are we raising this issue about an investor investing in Hambantota. If you take the port of Colombo, which is the 26th biggest port in the world, if the authority did not have the guts to launch the SAGT with only 15% shareholding, SAGT, where would Colombo be today? And why go back to 1997 with the investment of SAGT? What happened to us in 2009, the CICT investment? When CICT invested, CMHI. Now, if we didn't have a CICT, will we have a port of Colombo attracting 6 million containers for a year? So I think it's very unfair if we start talking about an investor having courage to come and invest in a place like Hambantota.
Usually, Dr. Sanaka, when you give away a particular property, we know even with the BOI Act, you would have a proper plan. The company in question would have to give a feasibility study and say this is what we are going to do at this particular location, this is how we are going to attract the investment, so on and so forth. What has the Chinese company done with regard to enlightening the Sri Lanka Ports Authority of their plans for the next 10 to 15 years?
Well, that will be a
Where is
mandate
that
for
plan?
that will be a mandate for the 2 new companies. We have just formed the 2 companies, and you know what you have to understand is that government of Sri Lanka, the Ministry of Ports and Shipping, and the SLPA, we were able to attract this investment.
No, I agree with you, but
we were able to attract this
what is
investment.
going to happen next? What sort of investments will take place? How are we going to develop the Hambantota port? What are we going to do?
Obviously, we will have to come up with plans, and I'm sure.
So no plans have been discussed yet.
No, I mean, okay, that aspect is discussed only when the company is formed and when the shareholding takes place. Now, what we have done is we have been able to come up with the basic framework, and the next is that we will have to go in for a shareholder agreement, and then the company has been formed, the shares are issued, then we appoint the board of directors, and then we go in for a plan.
Now what happens to this 15,000 acres of land that was initially discussed about a giveaway? Is this still on the cards?
I think it's a myth. I think it's a myth. You know, there's
nothing. It's a misconception, is it?
I think that's a total misconception. Talking about land, the only land that we have, or rather we will lease it, is 1,151 hectares of
that's
land.
11.5 kilometers.
No, that's 1151 hectares of land.
Okay.
That will be again leased into these two companies.
So one of the companies are China Merchant Group Limited.
No, these are two Sri Lankan companies. Two Sri Lankan companies in which SLP has shareholding.
Right, okay.
And the Sri Lanka Ports Authority will lease land into these two companies. That's all.
So
there's absolutely no alienation of land.
Okay, so with this limited amount of hectares or land area, there's no plan yet?
No, I mean, obviously, you know, we are trying to come up with a second stage, a container terminal.
Right.
As I said, we shall be in line with, say, CICT, a deep draft berth. And moment you see, what you have to understand, currently we have a shortage of deep draft berths in the port of Colombo. If you look at the 3 mega alliances controlling the world shipping, 3 mega alliances are controlling 90% of the shipboard capacity. Now, from Asia to Europe, these shipping lines have got 6 services. And only 1 service is called in the port of Colombo. Why? Because we don't have sufficient deep draft berths. So I'm sure the new company in Hambantota will be looking at coming up with a similar terminal in the port of Hambantota. And what would that mean? You are going to create wealth, create economic development, and you will also create employment, won't you? When you have a brand new terminal coming up in a place like Hambantota, you will attract ships accordingly.
Mr. Mascaral, in terms of developing Hambantota, you are the CEO of the Shippers Academy of Colombo. Do you see potential in the Hambantota port? Because we see right now, all companies, all manufacturing companies that are exporting goods from Sri Lanka go to the Colombo port. Do you think that there will be an opening in the Hambantota port for these companies as well?
Well, before I go there, I just want to touch on a couple of things on Professor, what he talked about building ports on loans. I worked in the Ports Authority, I have told you this before, in the 2000-2001 with former Minister Ronnie Dimel. And one statement he made to me while I was in London negotiating the war risk surcharge, he told me, Rohan, because Chandrika Kumaratunga had a plan called the Ruhunupura, building the port of Hambantota at that time. He said, Rohan, we will never build Hambantota through loans. It will be done through the development of Port of Colombo. We will have money from the South Harbour and we can start an oil jetty in Hambantota. That's where we will start, and then start expanding as per the method used by late Lalita Thulatmudali, stage by stage expansion. So that was the plan that I had with him in those days discussions. So
how
borrowing
drastically.
It has changed drastically. So we borrowed and we have got into a debt situation, and all of us are talking here because we got into trouble. Now we have to get out of it because there is support, there is infrastructure, public has to be, people have to be accountable to the public by doing something and recovering. So we need, if Sri Lanka has to become a hub, we need foreign direct investment, more infrastructure coming in from various international parties who have the capital, technology. That's how the multiplier effect will come. So exports, yes, we expect if a port is developing, maybe Sri Lankan companies will have joint ventures with the Chinese to export to the European market with the GSP Plus, and China is keen that we get into a trade agreement with India, they can access the Indian market. Remember all this, forget about the politics, there's large amount of trade between India and China happening right now. So we should not go on one track on thinking on the political side and the military side only. The larger game here is business, and China has business interests, India has business interests too. So we as a catalyst here in Sri Lanka, as a hub, we should facilitate both countries to do business rather than being scared of everything that of that country and this country.
Talking about the potential of the Hambantota port, do we really see potential?
I see a potential in the long run, as he said, but I also have a bit of a worry in the medium term. If China puts up a big terminal in Hambantota, Colombo South Harbour is having 2 more terminals to be developed, and whether they would suck in the transshipment out of Colombo to Hambantota, because the regional capacity at the moment is South Asia is at about 18 million TEUs, and Colombo handles about 30% of that.
Dr. Saranaika, would that happen?
Well, my simple answer to that question is that, as I said earlier, organizations do not look at supply-driven development, right? It will be demand-driven development. So obviously, based on demand only, you come up with capacity. If you just build capacity, I tend to agree with what Rohan also said, that it will be self-destructive. So as a sensible organization, with the involvement of SLP as well, we will obviously look at measured induction of capacity. And
because the last thing you want is something like the Mathal International Airport.
Exactly. So that's the point. So that'll never happen. That'll never happen. You have the east, you have the west, but then you will also have competing terminals coming up in the region, which you can't prevent. If you take India, India is coming up with so many facilities within South India, so which we can't prevent. So likewise, if you have competing facilities coming within Sri Lanka, I think there's nothing wrong in that.
We now go for a short commercial break. We get back in a minute, Charita. We're going for a short commercial break. When we come back, we are discussing about Sri Lanka signing the Hambantota port deal with a Chinese company. Is it good? What are the implications for the future? And where do we really stand in the next few years? All this and more after a short commercial break. Stay connected. Stay with Face the Nation. Welcome back. This is Face the Nation. I now move my attention in the third round to Dr. Parakram Dissanayake, Chairman of the Sri Lanka Ports Authority. Dr. Dissanayake, your first and the second round, we saw you saying good things about how all this took place and how important it is for Sri Lanka to sign this particular deal in order to ensure that we are on the right track. Now the concern is there were many trade unions attached to the Sri Lanka Ports Authority. We saw this happening in the Sri Lanka Petroleum Corporation as well a few few weeks ago. However, they protested against this move. Why?
Before we inked, I was given the task of talking to all the unions, and I summoned the 19 unions that was involved, and I went through with absolute transparency. I went through the entire agreement with them, word by word, and I'm sure you'll be shocked to hear that, except for one union who said, well, look, we cannot accept this, and of course they look at things from a political angle, but all the other unions, they said this is the best thing that could have happened, because if we continue to finance the port of Hambantota, SLPA would have gone bust. So, and for them, their increments, their promotions and their bonuses depends on the profitability of the Sri Lanka Ports Authority. So, they were all extremely supportive of the action that we have taken to safeguard and to protect the Sri Lanka Ports Authority.
But we saw tensions taking place within the Ceylon Petroleum Corporation as well. This is in particular after the shift of a particular minister from your ministry to another. Do you think these are driven by...
Well, I'm afraid I will not be able to comment on
agendas?
that.
But you see trade union action taking place. You saw this happening even before your minister took over the Sri Lanka Ports Authority and the ministry itself. And then suddenly everything was okay. Is that what you're trying to say? Well, is this long lasting?
Of the 19
or
unions,
is it patchwork?
Of the 19 unions that we have in at Sri Lanka Ports Authority, 18 unions have put up a leaflet commending the action taken by us. And I can tell you that I personally addressed these unions, and they're all supportive of the action that we have taken. So you see a huge contrast of what happened in the past and what has happened now. Obviously they have realized that this is a new structure. which was not the 80-20 the arrangement that was spoken about. We have completely changed the structure, and I'm sure that they are pleased that the interest of the SLP is taken care of.
Dr. Dissanayake, when you say past and the present, people may wonder, is it the past government that we're referring to? No, it is not. It was just a few months. You had a different minister.
That is what you said. That is not what I said.
Dr. Dissanayake, when it comes to those involved, you said about the 18 trade unions attached to the Port Authority, and then you have one trade union that is against, obviously. So all these 19 trade unions together, what was the message that you gave them?
Well, basically I said that we had a choice. We had an option of continuing to finance the Hambantota port, or to safeguard the interest of the Sri Lanka Ports Authority, and they realized that their future depends on the growth and the profitability of the Sri Lanka Ports Authority. Now I can just give you some numbers if you want to. In the year 2016, the profitability of the Sri Lanka Ports Authority was 1 billion. Now we have revised budgets for the year 2017, which is required by the government, by the Treasury, and as per the revised budgets, taking into consideration the non-payment of the loan on the Hambantota, and plus the other measures that we have brought in, our projected profit for the year 2017 is going to be 12 billion. 12 billion. Now, when I explain this to the staff members, the unions, why would they object? Now, would this not lead to benefits that we give to our employees going up? Would this not lead to the increments that we give to our employees going up? And when we take actions of this sort, why would the unions object unless you have a political dimension?
Unless you have a political dimension. And that is what, Dr. Dissanayake, unfortunately, we see what is happening or what transpired over the last few weeks. However, I leave it at that. I won't drill you further on the political dimensions that you are referring to, because you work as a state official right now at the Sri Lanka Ports Authority. I now move my attention to Mr. Rohan Maskorala, CEO of the Shippers Academy of Colombo. In May, we saw the Chinese President Xi Jinping saying that billions of dollars would be invested by China to build ports, highways, power grids in about 60 different countries, linking China to Asia, Europe, and then Africa. How confident are you that the countries in these areas, in these respective borderlines, will also be able to exploit the benefits of this?
Theoretically, when transport nodes are built, historically or even in the modern day history, in strategic locations as well as strategic networks, you generally have economic activity building. Now you look at on the Belt Road, the Kazakhstan or the CIS countries. Now China has put the railway track and the roads and the energy pipelines across these CIS countries and then connecting to Europe. What happens to those countries? They have access to China, they have access to Asia, they have access to Europe through fast linkages. Now these I am talking of the land routes. Right. Already they are benefiting. Similarly, when they have exports to these countries, from these countries also you access new markets. It's about new markets. We talk about accessing new markets through free trade agreements. Transport connectivity also creates new markets. Population densities are scattered in different parts of the world. Africa is, the global container throughput is going to, according to Drury, hit 830 million TEUs by next year. And the biggest corridors are, these are official studies, biggest corridors are Africa, China and Indian subcontinent. So you see there is a rationale behind.
Won't this have more dependency on the country itself? I'll give you a clear classic example, yes. Mr. Maskorala. Let's look at what happened recently in the Middle East. Qatar being sidelined, isolated, no connection whatsoever. Most of the containers that were supposed to go out of Jebel Ali to Qatar was seized completely. This put a further strain on the imports that were happening to Qatar. Everything was blocked, and we're talking about a free country, and you're saying that every country will be benefited. What if one country pulls the plug? Where are those benefits that we're talking about?
If you are looking at,
it's a hypothetical situation, but
conflicts
we saw this
that
happening
there can
in
be
Dubai,
conflicts, of
Saudi
course,
Arabia, Bahrain, and Kuwait, and then you had Qatar being isolated completely.
I agree. So what happened is they were not completely isolated. They had the Bandar Abbas and the Iran route and the Turkish route, and the air travel continues from those areas.
No, but there is a blockade.
But of course, if you look at future conflicts and don't plan anything, then where do you go? Your economic prosperity, then the global trade diversification, new markets, expecting conflicts, you stay put. That's not going to help any country.
I'll give you another example if you want to, Mr. Mascarala. The TAPI pipeline, which was signed in Turkmenistan, India, Afghanistan, Pakistan. And many at the start itself said that this is not going to be successful. And because this is the pipeline is going to come across Afghanistan, and then to Pakistan, and then India. And with the problems that Pakistan and India are facing, it will not come through even by the year 2020. There is always tensions, isn't it?
Of course, yes. But have you put the balance basket and said how many have been failures, how many have been successful in trade when you have connectivity? Connectivity is a key element for global trade. So we just can't look at conflicts. Connectivity might help to resolve conflicts, because economic prosperity, end of the day, makes things in a different way also. Of course, the Middle East conflict is something different. They are economically prosperous countries, all of them. But it's beyond trade or connectivity.
So you're hypothetical trying to say that China will never ever be in that position?
I don't see why China should do that, because it's detrimental to them also, because they all have 1 billion plus people to look after. So they have their interest, and creating conflicts is not going to be beneficial to anybody.
Okay, good point. Having conflicts won't benefit anyone. Okay, let's take India for an example. Did not even participate in the May event in China, which boasts about their prowess.
Yeah, well,
why? If that's the case,
clear.
why?
That is because of the economic corridor, which they claim that is going through Kashmir. The roadway is going through Kashmir, and they are protesting on that. But in my personal opinion, I think India should have gone there, because these matters also can be talked across the table and sometimes sorted out. Even
before the start of this initiative, you have fights, and we're not talking about hypothetical fights. This is happening even as we speak.
Right now, China is claiming that India has invaded part of its territory in the northern side. So these things will happen. That doesn't mean that China and India is going into war. That doesn't mean that. There are disagreements, and these disagreements under the UN border itself is still very much there, not only with China, but there are some other areas also, other countries involved also. Thank
you very much, Mr. Rohan Mascarala, CEO of the Shippers Academy of Colombo. I now move my attention to the very interesting Professor Rohan Samarjiva, founding chair of Learn Asia. Professor, more than the public-private partnership that was agreed upon, the concern for Sri Lanka was to be able to get back on the road as far as debt servicing is concerned. And this is a major concern for Sri Lanka. I recollect in February this year, Dr. Indranil Kumaraswamy, the governor of the central bank, said, if we don't get this $1.1 billion US, I don't know what I will be doing. He was very, very pessimistic about the country's economy. What was this deal all about? Is it about debt servicing? Is it about the future of Sri Lanka? What was it?
Well, you see, at any given point, I mean, I've been working in policy, I've been teaching policy, doing policy all my life, right? What you deal with is the particular circumstances that you're in, right? As I said, we had a different set of choices and a different set of circumstances back in 2006, 2007, or when you were discussing what could be done with Hambantota, or when we were discussing what could be done with Hambantota in 2003. Those are all different circumstances. What we now have to deal with is facts on the ground. Facts on the ground is there's a port here, right? It's very risky. It's a risky undertaking. That is, you keep asking whether somebody has come up with a plan and submitted it to the Board of Investment. Like, there are people in the Board of Investment who can really understand shipping a business plan for a port and approve it. I mean, I fail to understand what the value of that kind of paperwork is. Anyway, all that will require is some form of creative writing, right? Here people have invested their money, and if their business plans don't work, they will lose that money. Isn't that the best kind of plan? That you have skin in the game, you have got somebody to invest money, and it's in their interest to make money out of it, right? So that is the situation we are dealing with. Our country, we've got fiscal problems. We can make money or we can stop losing money, right? We have money-losing state-owned enterprises. If we can stanch the losses of our state-owned enterprises, that is like getting money, like getting revenue, right? And the same way with this particular transaction. It's not simply about balancing the debt, but the question that he posed to the unions is, if you keep paying out this money, the organization will go bust. If you keep paying out this money, the country will go bust. So these are not abstract issues. The question is, there's a port there. What are we going to do with it, right? And I personally believe that it's a risky undertaking. I don't think that we are going to make money simply on the basis of it being a transshipment port. It depends on the entire Bay of Bengal developing, and it depends to a great extent on the bypass route, the northern route that avoids the Malacca trap developing. So if all these things happen, I think I've said this before, of the 10 fastest growing economies in the world, 6, not including China, are around the Bay of Bengal, right? India, Bangladesh, Bhutan, Myanmar, Cambodia, etc. And then China is not like the United States or anything. It's not growing at 1%. It's growing just below that threshold. It's growing at about 5%, right? Which is probably, they're still growing faster than we are growing. So there is an enormous economic opportunity there. And these people are taking a risk. And we are lucky that the SLPA is able to participate in this future activity, this future business opportunity, without having to take more loans. With a small exposure, they are able to participate in this activity.
In other words,
that is what we need to think about.
In other words, Professor Samarjiva, you're trying to say that even to be able to give a loss-making state enterprise to a private company is a winner. Let's take a look at Sri Lanka Airlines. If we can stanch the losses, of course. Can you imagine? If we give away or sell Sri Lankan Airlines, which is something I have been advocating for a long time, that's like making about 20 billion Sri Lanka rupees a year. That's what we spend on this monster. And we saw the minister recently saying that to declare the Sri Lankan Airlines as a going concern as well in the
you have to pump more money. Where is that money coming
from? More money, absolutely.
Right? So get somebody else to do that. I would sell the whole thing. I think the whole question is getting this majority ownership fixation out, and Sri Lanka government should go into a minority position or 0%. Switzerland doesn't have a state-owned airline. Germany has privatized its company. I mean, all these countries have done that. What is our fixation with having a state-owned airline which we subsidize with taxpayers' money?
What if they say that they're trying to do it, but no one is willing to buy it?
That's because they're trying to keep a larger share. They're trying to still keep control. They shouldn't keep control.
Thank you very much, Professor Rohan Samarjiva, founding chair of Learn Asia. I open the floor for questions from our journalists, but I'm going to start off with Sonali.
Thank you, Shamir. My first question is to Dr. Parakrama. We spoke at length about the present and the future. I'd like to go a few steps back to the past in the interests of due process and the correct precedent being set. Doctor, we saw over the past few months, as soon as this Hambantota port came under discussion. There were clashes, there were even when the framework treaty was signed, we saw restraining orders being taken, we saw protests and all of that. So interestingly, one of the elements that I'd like to draw your attention to, since you are also a stakeholder, is there was an agency by the name of Agency for Development, which sort of met with Chinese parties and went for discussions, etc. However, we were later informed that there was no such body. So what kind of precedent does this set for Sri Lanka in general? I mean, when state actions are taken by parties who are not even existent in terms of the law, it doesn't really set a good precedent, does it?
Well, can I answer your question?
Sure.
All what I can say is that the entire negotiation, I'm aware about what you are trying to get at, is that this is what I have seen in the newspapers when I was in the private sector. And all what I can say is that after the appointment of the new Minister Mahinda Samarasinghe, and the reconstitution of the new board at Sri Lanka Ports Authority, the entire negotiation came within the Honourable Minister and the SLPA.
Right.
And I can tell you, not a single agency other than the Minister and SLPA was involved in the negotiation. And that's why that you see a complete difference in the framework agreement and what we have eventually achieved, and that's why that you don't see any dissent as well. What we have produced by way of a concession agreement is diametrically different to what the newspapers were talking about in the past.
Right. Going forward, what are some of the concerns that you see that Sri Lanka really needs to take stock of in terms of this PPP?
See, what you have to understand is that the global port industry, the global shipping industry is changing rapidly. As I said earlier, 3 global alliances, they're controlling 90% of the shipboard capacity. But they decide where to go, as to whether they are going to go to Malaysia or Singapore or Colombo or Dubai is a decision taken by these 3 global alliances. Just to let you know a point, the first quarter of this year, Malaysia, if you take Malaysia, they got 3 large ports. The volume loss was 30%. First quarter this year, Malaysia lost 30% of their volumes. Why? Because the volume shifted overnight into Singapore. Now, in this background, what is unique is that you can't be a loaner. Sri Lanka Ports Authority is a loaner. We are not multi-port global operators. So in this background, you need to have global players. Now, why is CICT in Colombo full? Is because they are a global player. You need to understand the type of business that we are in. Unless you are a global player, you will not be able to attract ships. Now, what has happened in Hambantota is that you have a global player in CM Ports Holdings Limited. As a result of that, they can use their network and attract ships into the port of Colombo, provided we have the right framework also in place here.
Dr. Parakram, are you trying to say that the Colombo port is getting the much needed attraction from other global companies because of the Chinese company and the terminal that is being built in Colombo?
Well, CICT, which is led by China Merchant Ports,
absolutely,
is the only facility that we have in South Asia which can provide deep draft berths. If you take the ships coming from Asia to Europe, within the next 3 years, 90% of those ships will be ultra large container carriers. They have a draft of 16 meters. It is only CICT that could provide. Now, CICT again has a constraint. Their key length is 1,200 meters.
No, Dr. Parakram, we obviously didn't have the capacity or the money to invest on a terminal like that sort. The terminal is fully equipped with high technology, so on and so forth. But my question is, Colombo was already a busy port.
Well, Colombo was a busy port, but we have surplus capacity, but those capacities not lined with the demand. See, the demand is that when larger vessels come on stream, you need to have deep draft berths, and on some day we have a congestion because we have only got 2 berths at CICT, and these large ships can only go to one terminal.
Right. My next question to you is, do you think that the Sri Lankan government in any way regret that it was given away to the Chinese company in question, which is handled by China Merchant Shipping? Because when we see the balance sheet of this company in question, it's exorbitantly high. They have earned approximately $5 billion on this terminal in question. Do you think it's a concern for the government?
No, I'm not sure. I think when the government at that point of time called for tenders, there was only one bidder. That was during the recession, and this company had the courage to come in and invest, and that investment has been proved right. So I will not be surprised that even the investment that they are making in Hambantota, will not be proved wrong for that matter.
Mr. Maskorala, interesting thoughts by Dr. Parakram Dissanayake, but we should have a plan for the future. We probably want to look at the Hambantota port in the next few years as a future Jebel Ali or even a Ras Al Khaimah for that matter in Dubai, which are doing quite well. It's free trade zones, you can do business, there is blending facilities for tea exporters, so on and so forth. We're looking at the future. Do you think that we will see this future by giving away the Hambantota port?
Sad story is that after late Laplat Mudri, we haven't had proper plans. Now he's trying to draw up a plan these days. But yes, it has been quite a politically involved decision. I worked for the president's office during the last regime. I worked for the current regime. I worked for 3 presidents, so they're not thrown me out, right? But I was opposing from the Strategic Enterprise Management Agency because the CICT was supposed to be partnered with Dr. Parakrama's former company, Atkins Spence, and suddenly numbers changed, and they thought the ROI is not going to be good enough for them to be there. Because I personally feel Colombo was the South Asia's gold mine for transshipment. And why are we only taking 15%? We should at least have 25%. You look at SAGT. Now, John Keeves had 10% or 10%, other than the SLPA. So, the country had about private, public, local is about 30% actually. Now, see what John Keeves did over the last 10-15 years as a company. They managed to expand, and if you look at their annual report, it's a public quoted company, the transportation sector was the biggest contributor. From where? From the terminus.
But not anymore.
Not anymore, but now after 15 plus years, they have made their investment recovery, and they are still growing. Their design capacity was 1.1 million. Today they handle 1.7 million. So if 1.1 million is going to be profitable, how come 1.7 million still? I think SAGT still gives a 15% to SLPA, a good sum. So I was opposed that why Sri Lanka should not have a bigger stake. That's a different story. So the model has been 15%. At CICT, Atkins Spence had to go out. Model became 15%. Now this gentleman have to go on that model. Whether that is the right model, I don't know.
So the model in place, I was about to ask you, is that the right model? And then you say whether it's the right model or not, I don't know. So it may not be the right model, isn't it?
I personally felt from the day one, from 1999, because we have not had a plan. A regulator was supposed to be there in this country within 5 years or 4 years of operation of SAGT. That regulator has not yet been established.
Now my third question to you before I move on to Sonali. Mr. Maskorala, now you say that you have to have consistent policy.
Yes.
However, the last 4 years alone, there have been 2 ministers. Now, where is consistent policy? Do you think that we can go ahead? You brought in a good example Lalita Mudali as the Minister of Ports at one point did have a vision for the Sri Lanka Ports Authority, did have a vision for logistics in Sri Lanka. And now you see this regime.
Let me go back. I don't want to go 4 or 5 years. I talk of after 94. If you could remember, we were talking of a Oluville International Port. What has happened to it today? And what happened during that period? Colombo Port was supposed to be dredged. The first mega carrier 6,000 TEU vessel Regina Maersk could not enter the port of Colombo with a 12-meter draft. Minister Ronnie Dimel took a decision. I have the copy of the decision. Over the phone, he said, I as the minister approved $16 million to dredge it immediately. Right? Because Colombo Port was neglected. He said, don't worry, I go to the cabinet later. This is priority. I take the responsibility as the minister. Right? I have all this documentation with me. So then he also wanted SAG to partner that burden of 16 million, but I don't think they partnered. That's a different story. But here again I am saying we divert from Oluville Port to Hambantota Port to everything when Colombo was the key port which we should have been expanding capacity gradually. South Harbour was probably needed, I don't know if Dr. Disanayake agrees, by 2004 we should have had it running at least the first terminals, then we would have had more volume by now. All 3 terminals probably would then operating because ships look at long-term planning. Operators, as he said, they look at next 3-5 years, how are they going to plan their schedules. So if we don't read their mind or the business strategies and do the infrastructure right and go and build something that is not having any business plan, or you talk of a feasibility, if somebody can show me the Hambantota feasibility. You asked about his feasibility now. Show me the feasibility of 2010 port. Because I was invited for the opening and I said, yes, if your financing and marketing plan has been done well, then you have berths here, then obviously some business is going to start. We didn't. So feasibility was not there then. So now we need the feasibility, but as I said, planning has been absolutely bonkers.
Yes, Sonali, you had a question?
Mr. Masakorala, as an expert in shipping, can you shed some light on the allegation made by some that there are security implications? I mean, can you allay those fears that some people say that this is considered a foreign interference? What are your thoughts on this?
Now look at Greece. Piraeus port, 67% is controlled by China. So does that mean that there is a foreign presence in Piraeus, Greece, and that Greece is going to be invaded by somebody? No. Tanzania, I talked to him, $10 billion. Kenya, railway, ports, China has invested. Right? Port of Singapore has gone and invested. There are PSA terminals in India. Right? Hutchinson ports have gone and invested. So these are global players. Unfortunately, Sri Lanka couldn't become a global player. When we started containerization, Dubai was nowhere. Now Dubai ports is a global player. Singapore handles 65 million TEUs globally because their companies have gone and started operating in other places. That doesn't mean that, so just as CMI also, China Merchant also is an international player.
So your short answer to the question is no.
No.
So how do you see this lack of public consensus and lack of proper information being disseminated among the public? Even if we take a simple issue of this 15,000 acres of land argument, which is floating about so ubiquitously, why is that?
Well, some people can market better, other people can market not so good. So it depends on gossip and what you put on Facebook and what the public believe. So this is the tendency of a country that has a developing kind of mentality of many people. You can sell a lot of things. Now this 15,000 acres, I have heard the Prime Minister talking about it. What he is talking about is, with the development of the port, with the development of the airport, the whole area will have development going, what's called the multiplier effect in economics.
But don't you think it's the responsibility of the government to ensure that correct information is disseminated?
Yes. Oh yes, I have no hesitation of telling that.
Dr. Samarajiva,
Professor Samarajiva.
Professor Samarajiva, Dr. Samarajiva, there's another common misconception among the masses that we are giving the country away to the Chinese. That's a question that people tend to ask, and there seems to be no one from the authorities who can give a proper answer to that, which is why we see so many protests. So could you shed some light on this?
Well,